Alrighty, so today I took a market structure demand 4.5 hour trade. I risked $122 for a little over 500 bucks, and this was essentially the trade, right? So going into the context for today, I had marked up the demand, which is also a significant level, which is the 69.30 level. Now, the reason that was significant was I talked about it in the last video I had, but also because if you can see here, this 30s level was the start of kind of where this gap started, and we stayed below that level for quite some time. You can also see that we actually had buyers defend this level a few sessions prior to this gap. So the fact that we were kind of entering it in the pre-market session and seeing whether we could hold above it, that was very, very important to me. And so I went in with the mindset that if we were able to be above it at market open and stay above it for some time, then I would basically look for longs targeting the 69.64 orange line that you see here. Okay, the orange line was also explained in the analysis video I posted yesterday. But essentially what we did instead was we did open above 69.32, but we opened up pretty close to 69.64, so it was kind of invalid for me to play that. But I'll go to the 5-minute chart here now and show you that we essentially tagged that orange POC 69.64 level at the first 15 minutes of market open, and from that level we actually dropped really hard and began to reject that level. Now, the key main level again was the 69.30s level, and so as it was dropping, it started to stall at this key area that I discussed in yesterday's video and right now, which was very important, right? So this was basically setting up for a drop, base, and then rally, which is market structure demand, right? That's essentially what market structure demand is. And so in this basing period right here, I went ahead and got an entry long to target the swing high that I saw on the book map. So essentially what I saw in this market structure of demand was that we started to consolidate in this region, okay? And then if you notice here, we tried breaking the low of day, which was at 69.26 several times, right? Over here you can see it. We tried to break it. Over here we tried to break it. Over here we tried to break it as well. And if you look at the volume here, it's very, very low, indicating that there's not a lot of interest traded at those price levels, right? So because of the fact that there wasn't a lot of interest there, it was indicating to me that price is not really being accepted at that level. And combined with the fact that we were in a demand zone, which was the 69.30, this was a key level that I talked about literally yesterday, and there was market structure demand forming, or potentially forming, I was looking for an entry. And so we get this, I don't want to say rally, but we get this kind of pop outside of this market structure demand consolidation region. We pull back into it, and on this pullback, there was another, I guess you could call it a low of day attempt, because at this point, right, you would expect that if price was really bearish, after this pop, we would go ahead and target the low of day. But we were unable to target the low of day. We actually just failed to hit the low of day, and buyers actually held this price level here at the 69.27 2/4. And when we bounced from there, I got an entry right here at 69.29 2/4. And I put my stop loss right here with this red circle is, and this was the 69.26, which was around the low of day. The reasoning was that, if we held this level and we're bouncing from it along with this pop right here, I can safely assume at this current moment that buyers are buying these dips, and price should not revisit the low of day again. And if it did, let's just say it did revisit the low of day, I get stopped out, and it still left this volume tail here and continued to go up, then I would look for a re-entry, because that would still not technically, it would invalidate my thesis on this current trade, but it would not invalidate my overall idea. So just an important nuance there. So essentially I got I got long at that price level over there, and I was targeting the swing high, which was at the 66.44s. Okay, and the reason for that was because from this area we had this kind of aggressive drop into this, where the market structure demand formed at this two purple line area consolidation. So this trade lasted about, I think, 20 minutes, and there was some pretty scary fluctuations. Move to the 1 minute chart. You can see here that wait for it to load. I got long around here, and several times price kind of did not go. It retested my entry location quite a few times, and it wasn't smooth sailing after I entered this trade. I entered this trade right here, the 29 and a quarter, 2/4, and price came back here to my entry. I did not exit the trade because my idea was not invalid yet. Then we came up, came back down again, 2 points below. I still did not invalidate my trade. It still did not invalidate my trade, so I kept the trade. My stop loss again was here at the 26 flats, and that was right here. Let me just draw it right about right here, 26s. And you can see here from my entry, we never hit the 26s. We did have these scary periods where price came back into this zone, but again, that did not invalidate my trade, and I continued to hold the trade. And eventually we get a rally up towards the 45s. I took my, where was it, around here, I think. Yeah, right about here. I took my position off for at the 69.45 and a quarter, I believe. And so that was the trade, a basic market structure demand setup.